You buy a term plan, sign the papers, pay the premium, and breathe easily like my family is secure now. But the real strength of your policy is not always in that big cover amount on the front page. Sometimes the real strength is hidden in small optional upgrades that barely anyone talks about. Upgrades mean like that could double your payout, cover you during critical illnesses, or replace your lost incomes. And these upgrades are called riders. Riders is like an upgrade to your insurance, and it's not something you must have, but you can add riders if you want to enhance your coverage. And it does increase your premium slightly, but in the right situation. It can be the big difference between your family being financially safe and facing a crisis. And unfortunately, most people either ignore riders altogether or get confused by the choice and simply skip them. So, can we make it unique? Let's change it today. Hi, I'm Mariam and I represent PolicyHub, a place where we make insurance simple and easy to understand. And in today's video, I'll explain what riders in term insurance are, why are they important, and how to decide the right duration for your term insurance cover. And if you have any confusion or feel stuck in choosing the right term insurance, don't worry. Book your free consultation with us today and our expert will connect with you, understand your needs, and suggest plans that fit your requirements. And the link is given in the description. So let's move further. What exactly are riders? So as we already discussed, riders are small attachments to your term insurance plan that give it extra power. And your basic term plan promises a payout if you pass away during the policy term. But life is not always so straightforward. Accidents happen, illnesses strike, incomes get disrupted. A rider step in to give you specific protection for those situations. So let's start with the first one. The first rider is the critical illness rider. So imagine not in a dramatic way, but in a realistic, everyday sense. You are living life as usual and paying your bills, caring for your family, and suddenly your doctor tells you that you have a cancer or you have suffered a severe heart condition. Even if you survive, the treatment in India could easily cost 20 lakh rupees or more. And without the plan, you had two painful choices: either sell assets you have worked hard for or drain your life savings. So, critical illness riders changes that. The moment you are diagnosed with one of the covered illnesses, you get a lump sum payout, and this money is separated from your main life cover and is paid out while you are alive. So you can use it for treatment, medications, travel for better care, or simply to replace lost income while you recover. Then second rider is accidental death rider. If death occurs due to an accident, this rider gives your family an extra payout over and above your base cover. And this is especially useful for those who travel frequently, work in higher risk environments, or spend a lot of time on the road. And another valuable rider is the waiver of premium rider. If you become permanently disabled or are unable to earn an income due to certain conditions, this rider ensures your future premiums are completely waived off. But your insurance coverage still continues as it is. This means you keep your protection without worrying about how to pay for it when your income has stopped. Another rider is terminal illness rider. This rider pays out the sum assured in advance if you are diagnosed with a terminal illness. So, what is terminal illness? An illness where doctors certified that life expectancy is less than 6 months and the money can be used for medical cares, settling debts, or fulfilling personal wishes during that time. The fifth rider is income benefit rider. Instead of your family receiving the payout as a single lump sum, this rider ensures they get a regular monthly income for a set number of years after your death. And it's useful if you want them to have a stable income flow rather than a one-time amount they might struggle to manage. Another rider is family income benefit rider. This is similar to the income benefit rider, but it starts providing a regular income immediately after life assured pass away and continues for a fixed term like 5 year, 10 year or 15 years. It's designed to replace your monthly income and cover everyday living expenses. Another rider is surgical care rider. If you have to undergo a major surgery due to illness or accident, this rider provides a lump sum amount to cover surgical and hospitalization costs. It helps reduce the financial burden of planned or emergency surgeries. Another rider is hospital cash rider. This rider provides a fixed daily allowance for each day you are hospitalized due to illness or accident. The amount is meant to help with daily expenses during hospital stays, which may not be fully covered by health insurance. Another valuable rider is disability income benefit rider. If you become permanently or partially disabled due to an accident and are unable to work, this rider pays you a fixed monthly income for a set period, and this helps maintain your household expenses when your earning capacity is reduced. Another rider is premium back, or you can say it a return of premium rider. If you survive until the end of the policy term, the rider refunds all the premiums you paid, and it does not provide extra coverage but can make the plan feel less like a pure expense and more like savings. Another rider is child education rider. These riders' names are vary from the plan to plan. And in child education rider, in the event of your death, this rider provides a specific sum dedicated to your child's education, and this ensures your child's academic goals are not compromised, even if you are not there to support them. Another rider is critical illness plus rider. This is an enhanced version of the standard critical illness rider. Instead of paying the benefit only once, it may allow multiple payouts if you are diagnosed with different critical illnesses at different times, depending on the insurance terms and conditions. The next rider we are going to discuss is accelerate that benefit rider. If you are diagnosed with a serious illness that significantly shorten life expectancy, this rider allows a portion of your life cover to be paid early and the remaining cover stay intact for your beneficiaries. Another rider is long-term care rider. If you become chronically ill or unable to perform basic daily activities like bathing, dressing, eating, this rider provides a payout to cover long-term care costs, home nursing, or assisted living services. Another rider is which is best for women is pregnancy wallet. By opting this rider, in this women can take benefits on OPD basis. The another most valuable and important rider is auto continuous. By opting this rider, in this, if you face financial crisis in future, then you have to inform the company in advance that you are not able to pay the premium. Then the company does not lapse your policy and still be active till the next year when you pay the next premium. Another rider is which is overlooked options, extending coverage to your parents, which comes as parent care rider. We usually think of term insurance only in terms of protecting our spouse or children. But if your parents depend on you financially, there are riders that extended benefits to them as well. This ensures that if something happens to you, they are not left financially dependent on anyone. Now, as we already discussed all riders, I know what you might be thinking. Should I take all these riders or just a few? Then the truth is, there's a no one size fits all answer. Riders are like add-ons. They are meant to make your policy stronger, but only where you actually need it. For example, if you are the only earning member in your family, and accidental death benefit or income benefit rider can be a good choice. If your job involves higher risk like frequent travel or field work, then critical illness and disability riders can offer an extra safety net. On the other hand, if you already have separate health or accident coverage, you might not need to duplicate the same protection here again. So, before taking every box just because it's offered, think about your lifestyle, your existing insurance, and your budget. Remember, the goal is not to have more riders, it's to have the right riders that actually work for your situations. Once you have chosen the right riders, the next big question is how long should your term plan actually last? This is another area where many people make mistake. Here's a simple rule. Your term plan should cover you until the age you plan to retire, which for most people is around 60. And by this time, ideally, you have paid off your loans, your children are financially independent, and your need for a large cover naturally reduces. However, life is rarely that neat and predictable. If you have younger children, late home loans, or financial goals, then extend beyond your 60s. You might want to consider extending your cover until you are 70 or even 80. This way, there's no gap in your family's financial safety net if something unexpected happens later in life. So, at this core, In simple, term insurance is one of the simplest, most affordable, and most essential way to protect your family's financial future. It's not about living in fear. It's about care that you do a lot for your family. It's about making sure that no matter what happens tomorrow, your family's dream and goals stay alive. If you are still unsure and about which term plan is best for your needs or which rider you should choose, book your free consultation with us today and link given in the descriptions. If this video has helped you understand things better about term insurance, then share this video with someone you care about and don't forget to like and subscribe our channel. Till then, bye.